Welcome back to Income Trading 101. Today is March the 1st, 2021. I wanted to take a look at Johnson & Johnson because we've seen some interesting stock moves out of some of these companies that are producing the coronavirus vaccine, and definitely wanted to take a closer look at this one. And it doesn't get any more sort of blue chip, old school than Johnson & Johnson. They had earnings back in January where they were lower than their estimate, but then they still turn around and paid a $1.01 dividend. So that's a $4 dividend a year that this company pays out. Now it's a pretty expensive stock. It's $159.32 at the close today. But still, that being said, this company has paid a dividend. We can just keep going back and back. This is just one of the sort of core companies to our economy, and you can see the dividend growth. I actually like the way TradingView does some of this, just because it makes it easy to track and see if there's any additional pieces that might have affected the stock, like an earnings update or the announcement of a dividend. We are going to go ahead and take out the the volume. Not that you can see it, because it's so plastered with the earnings updates. But let's see. You can see this huge uptrend in the stock. And what would be interesting would be to lay over just the Dow, see what the actual beta is to the index. I'm sure it's a decent one. So before we get started, I'm going to go ahead and shrink the time frame again. You guys know this whole period, this downward move from mid-February down to late March, that was all pandemic COVID. And then we had this rally, and the stock still pulled off a bit, pulled off some, but has rallied higher than it had previously been. And today it's about $13 off of its most recent high. So let's go ahead and shrink that. We're going to add in our moving averages and just take a look at what's going on with Johnson & Johnson. This is, while it's been a nice up move this last year, has not been a clear upward move. It's been, or at least it hasn't happened quickly. You see, there's a period of flat prices here. You got a period of decline back in the beginning of the summer, May to early July, and then you had an end of year rally as news of their vaccine came out. But with the peak there on January 26th, and we're a little bit lower than that now. Let's go ahead and set this up too. We're going to set up our 20-day moving average. We'll do the 60, and then we will get this show going. So there we have it. No surprises, of course, in the recent data. Although, look at here and at the one day data, we have a bit of congestion. I'll call it congestion when the moving averages are out of line, they're out of order, with the 20 being higher than the 10 and the 60-day being lower than all of that. You can tell during the upward trend, you had the 10, which was higher than the 20, and the 60. But at this point, the 10 and the 20 are really too close. That we're going to see that kind of play out, I think, in some of the other indicators as well, like the MACD. But let's switch up the time frame here. We're going to break it down to an hour chart. And it doesn't surprise me, at the hourly level, you're going to see more of a true downward market, where you have the 60-day is higher than the 20, which is higher than the 10. 10 is hanging really closely, 10 period, hanging closely with the underlying price. Yeah, just really interesting. I don't know how many of you all used to or have played around with time frames in your trading, but it really does help you take in as much data and validate or invalidate kind of some of the moves that you think you might be seeing. So at the 30-minute level, we have a bit of congestion too, with the 10 and the 20 right on top of each other in the 60-day higher. So that's less certain. We'll break it down to the 15. That'll be it for this. So at the 15-minute level, you do right now have all three are in line, all three moving averages, with the 60 higher than the 20, which is higher than the 10. That would be an indication that stock prices are heading lower from a technical standpoint. But I still feel like so much of this is unknown. So let's put it back to the 1 day and just take a look at the MACD. The MACD is a great it uses moving averages, but it also adds a little bit more information. So being able to take a look at the MACD relative to some of these price movements can be really valuable. The MACD right now appears to be heading lower. It's in line. There was a crossover back here on February 1st. The signal line going above the MACD line, which is in blue, and markets have kind of sold off since then. It did have one bit of a peak and then sold lower. From there, I'll point out here in a little bit why I'm hesitant to actually go short this stock. But let's play around with time again. We're going to take it down to the 1 hour, see if we see anything a little different. So at the 1 hour, we have a situation where the MACD and the signal line are close. So that could mean that we're about to get more of a bullish move out of this. But again, I'm not overly confident. If you look at this move here, you had a cross below the 0 line of the MACD higher than the signal line, and I like when it goes into the positive. So when these numbers are negative, we consider that oversold. When they're positive, we consider it overbought. And it went on higher until it crossed and then came back lower and has been below the 0 line essentially since then. It'll be interesting to see if it's going to pull higher than that. Let's take a look at the 30-minute. On the 30-minute, it looks like we've had a crossover below the 0 line, which would mean that this would have been a buying indication. And I want to say with the what I really want to see happen with this crossover, it's not just a crossover, but I want to see it cross the 0 line like it did back here. It crossed the 0 line, and we got to see prices really take off a bit higher. We saw that back here as well. I mean, there obviously was a gap price move there, so those are a little harder to just sort of predict. Certainly not with technical analysis. So let's do one more thing. Let's take a look at it from the 15-minute standpoint. And look at this. This is what you always want to avoid, is you'll see these crossovers happen, and it looks like we might be heading back lower from a, there we go, just expand that out. You see how it's the signal line is on top again, the MACD line on the bottom. Looks like it's going to head lower again when we look at the 15 minutes. So I really ultimately think that this is inconclusive too. And it's funny when I see a stock that is really truly rallying. I mean, you know, like all the signals line up, or at least most of them. It really doesn't end up being a stretch. One of the dangers of technical analysis, of course, is that sometimes you will see what you want to see, right? You'll see what you want to see, and when that happens, you run the risk of losing money because you're seeing what you looked for rather than what the market showed you. And I try my best to be aware of that, and that's part of the reason why I talk about things like being patient, because sometimes you have to be patient just to let the market do what it's going to do. So we really don't have a retracement to discuss. So I'm going to make a couple of parallels. So what's partly interesting here is that this trend line actually encompasses that high. I hadn't noticed that these tops were also in line together, right? Let's do another one. There you go. So aside from the 2 or 3 days of peak and a couple of days when it was lower, this trending channel higher has essentially held up until recently. Recently it changed, and then we're going to put one more on here, and that is that. So you can ask yourself, okay, so how should I trade this, right? What should I do? And honestly, I believe that the stock will trend higher. I do, but it doesn't appear to be happening just yet. I'm more of a trend trader, which is why I like these sorts of analysis or tools. And right now, the tools seem to be saying we're going lower, but we could end up getting 1 or 2 pops, and that will make it where the moving averages across the board are going to be bullish. That'll make it where the MACD crosses above the 0 line, and it's definitely going to show like, hey, this is a buy. We'll see it. We'll see it all happen. But right now, the channel says this stock is going lower, and I would certainly just keep an eye on it. If you want to do things like sell put spreads, not sell put spreads, buy put spreads, sell call spreads, the kind of trades that will make money as the market goes lower, but also limit your risk from the moment you put it on. I like those sorts of trades because, then I'm just trying to play a higher probability outcome, not necessarily just, hey, I'm going to go out and short Johnson & Johnson, because if you just short Johnson & Johnson and this strong rally continues, you're going to be kicking yourself. So I want to find ways to limit and define my risk right up front. I personally would take a day or two to see if this price is going to push higher or not. And if not, it might be time to consider a short strategy that might really capitalize on the price movement and the price momentum right now. But just know that this company, Johnson & Johnson, has been in like a 10 plus year net rally. So sometimes it's good to sell, but I'm not really a fan of selling companies that honestly I should probably just own and sit on for my portfolio. So that's it for tonight's video. Thank you guys for watching. Hey, if you have any questions, feel free to leave comments. You guys have been leaving some comments on the channel, which is great. I do respond to some of them when I get a chance. Someone called me out for my horrible joke yesterday about February 28th. It just didn't quite. I'm not going to try and make up for it now. I'm not a comedian. I'm a technical analyst. So, hey, have a wonderful week, trading day, and happy trading. Bye-bye.